What's up? What's up? What's up? Good morning, everybody. Happy Tuesday. Welcome back to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso with you as we are pretty much every morning. What's going on today, chat? What are we talking about? Talking about China? Yeah, we're talking about China a little bit. Nothing like the old stimulus trick to try to get those prices up. So we'll talk about that. China making moves overnight. Visa is in my dock as well. Some interesting upgrades today. And also, we're going to talk with a new guest that Steve met when he was out gallivanting in California. David Schulhof. He is the founder and CEO of MUSQ, and he's got the MUSQ ETF. So we're going to talk about that today at 9. It's Tuesday, so hopefully Pat stops by as well to talk chart report, and that's what I got going on. So without further ado, hello. I'm sorry. I'm reading the chat and y'all distracting me. Let's go. Smash the like, please.
All right. Good morning. Good morning. China up huge, up 4% overnight. All these things, CQQQ, which is the China technology, ripping 5-6%. FXI, K-Web, which is the Chinese internet, all of them are ripping this morning. We're going to talk about it in a minute, but could be Spencer Israel. One of the most historic double bottoms of all time. I don't know.
People are saying.
I don't think people are saying. I'm saying it. I haven't seen anybody else say it, actually, now that you mention it.
Wait, I don't remember where we left it. You were talking about China a couple months ago, and you were like, am I crazy? And then I don't remember where we left that.
We bought the call options, but we had limit orders so that if it took longer and kind of traded down, we'd get filled in at lower prices. Remember, we had those leaps.
Okay, right, the leaps. Okay, yeah. Now it's coming back to me. All right,
shall we?
Sure.
All right, ladies and gentlemen. We have the Dow futures flat this morning, up 38 points, 42,500 and change for the Dow Jones Industrial Average. Again, I will reiterate, 42,500 and change for the Dow Jones Industrial Average, creeping towards that 50,000 level a lot faster than many think. S&P futures flat this morning, 57.78, approaching that 6,000 level for the S&P 500. NASDAQ 100 futures also flat, holding above that 20,000 level. 30-year bond futures down almost 1% this morning, down to 124. Crude oil up 2.5%, 72. Copper up almost 3%, close to 4.5. Gold flat on the day, 26.50. Silver up 0.5%, 31.25. Volatility, the VIX still at 16, and over in funny money land, you've got the Bitcoin up about 0.5% this morning, 63,600. Ethereum, 2,600 and change, flat on the day. Solana, up 2% on the day, 148 with Binance. Now back above 600, flat on the day, but Binance with a 6 handle. Total crypto market cap, Spencer Israel, $2.18 trillion. Bitcoin dominance still above 57%, swinging around that 57 level. How do we feel about this morning's futures?
How do we feel about it? Yeah. We feel all right. I don't really feel any way about it.
Anything stand out there? Or should we just get to the obvious?
Not really. In the overnight markets, I mean, the overnight markets, yeah, what stands out is nothing you just said. It's all about China, right?
All right, let's get to it. Throw the chart. Show everybody what's happening. Steve Strazza, how do you feel about this China, my friend?
I feel pretty good about it.
Do you feel pretty good about it? Are you in favor of a rising Chinese stock market?
We've been talking about this. Like, it's been hard to make the call that it's time to add exposure to China based on price, but sentiment, I think, is really, really set up nicely.
Can we just talk about the fact that these are the worst companies in the world. Like the rest of the world agrees that these communist fucks did
No.
everything wrong and we can't trust them and they're always changing their mind and they lie and all these things, right? So as investors, we don't know what the hell's coming out of there. They're just making things up. And I'm not saying like me specifically, we're long China. But what I'm saying is like as investors, that's kind of like the thought, kind of just like, oh, just China just sucks. So they have over the years turned into the worst companies on the planet, right? Probably because of where they're located. Nobody wants them.
They're not all bad companies.
What's that?
They're not all bad companies, really.
Well, we're talking about the stock market, and yes, they are pretty bad. Yes, from a publicly traded standpoint, they might be doing something. They might be doing something internally that's just fine, but
no,
public stocks, they suck.
Call
they
them
couldn't be worse.
Stocks.
Well, hold on.
Call them bad stocks, not bad companies. Then, right?
Who cares? What's the difference?
There's a huge difference.
If you're a bad stock, you're a bad company, as far as I'm concerned. CEO's job is to increase shareholder value. So if the CEO is not increasing shareholder value, the company is not doing its job. The company's there to serve shareholders. It's not there to serve employees. It's not there to serve the government. It's not there to serve the public. A publicly traded company has one purpose: to make investors money, period. And if they are not doing that, then they are a bad company, period. But hold on, forget about that. We can have this philosophical discussion another day. My bigger point here is that the worst companies on planet Earth can't go down. They can't make new lows. What does that say about the bull market if the worst piece of shit companies on the planet are getting bought up also?
That would be bullish.
Think about it. They can't knock down these companies. They're buying China? China? Can you throw up some of these returns, Spencer? Let's school these folks. Let's school these folks. See this? See this? This is what happens when the government controls your shit. See that? Look at that. You suck. Look at that. S&P 500 over the last 4 years. And by the way, I cherry-picked this period specifically, 4 years, because I wanted to go back to before stocks peaked. So you have that full, right? So I wanted to reiterate here the lack of recovery from China, right? The United States sold off after 21, as did everything else, right? After that COVID bounce, everything rolled over the following year. The United States recovered, Europe recovered, all these things recovered. China did not. China did not. China just kept going lower, never got the memo that we're in a bull market. Wait, this is the CSI 300, which is like equivalent to the S&P 500 for China.
Is this the Shenzhen?
This is the CSI 300. So these are the stocks that trade on the Shanghai and the Shenzhen. But if you want to go to the next chart, just so you can see that it's not like this one index. This is the here we're looking at the FXI, which is the ETF, which pretty much mirrors it pretty good, by the way, Strazza. The CSI with the FXI. But look at the A shares down 28% during that period. CQQQ, which is Chinese technology, down double that. KWeb, which is Chinese internet, down double that. Right?
Where'd you measure this, from the COVID lows?
No, 4 years. It's just 4 years. Just 4-year returns, because I wanted to go back to before we peaked, you know? Like everything rallied into 22 and then everything rolled over. So I just wanted to show that while the rest of the world has recovered and has been in a bull market for the last 2 years, China has not participated in that, is the reason I chose that period.
If there's one group of stocks, if there's one asset class that I want to look back at in 10 years, I'm most excited to look back at and see what happened, it's Chinese stocks. I think there's going to be a monster trade here, and I think it's set up right now. Whether these things are investable over longer time frames, I think nobody really knows without hindsight. I think that'll be fascinating to look back.
Go back to the chart from this morning here, Spencer, please. That first chart, because what we're seeing is the 4% rally this morning, 4.3% or so in the CSI 300 index, biggest rally in over 4 years. You think where it started to rally is just a coincidence? Is this one of those things where Spencer's going to be like, oh, JC, The Chinese stocks were rallying because of the government cut interest rates or whatever stimulus bullshit they did last night, right? Is it going to be one of those that Spencer's going to tell me that it's because of that, not because there's support here?
I would tell you it's both, but
I probably can't speak so much to the rally off those lows, JC, but the overnight rally here specifically now, yeah, it was because they lower their interest rate and they are giving people money to invest in their stock market.
And then let me ask you this there,
awesome.
Einstein. Why? How come these Chinese stocks have been rallying for a week before this like big event that you were talking about? Because Chinese government likes to tell other people so that they can make money from it.
Maybe. Who's to say? Who's to say? Who's to say?
Steal from the poor and give to the rich. I get it.
Who's to say?
I get it. Makes sense. I wouldn't be surprised.
But JC, whenever you're done talking about China, I can expand on, what I think is a broader theme that you're really describing here about the worst stocks, right? The laggards. I bought some Unity software calls yesterday. These are just the stocks that are working really well right now. Sean and I put an options trade on ARC yesterday morning. These are the names that are working. The best charts that are getting sent to me every morning are from Sam. They're the most heavily shorted stocks in the market. This is what's working. These are the ones that have been terrible this whole cycle. Now they're joining the party. And guess what? They're joining in on the fun at the exact moment, I think, when we needed them. Because things continue to look a little bit dicey, a little bit rocky for the early leaders, for areas of the AI trade. I think tech still looks like it's on rollover alert on relative terms, right? But then you look down the cap scale and out on the risk spectrum, and there's plenty good going on in other risk-on stocks. So I think it's an all-clear sign. China.
Can you throw up slide 2, please, Mr. Spencer Israel, my good man?
I think small caps.
Speaking of the biggest pieces of shit on the planet, here is the solar ETF.
There's something here.
A little divergy.
So there's something here. I'm big in the first solar now. That's a new thing. That's a new one.
First solar represents like half this index or something crazy, doesn't it?
I love the way FSLR is set up right now.
Well, it's the best one by a long shot, but it is it's actually less than 10%. It's actually less of a weighting than I thought.
And
that's surprising.
Also, JC, I mean, just look at this base in N phase.
Yeah.
ENPH. These things are looking good.
So you would group these in the category with the biggest pieces of crap on the planet. You got solar stocks. Hold on. You got solar stocks. You got Chinese. You got the biotechs, and you got like the ARC stuff, right? So think about these things that we're talking about here. And this is something you and I spoke about a few weeks ago in a meeting, is that these were the names that peaked in the early 2021, right?
Yeah. Look, they're delisting frontier markets right now.
The frontier market ETF, they're delisting it?
There's just a lot of this going on. Nobody wants China. China's a disaster.
Wow.
Having one of their best day in a long time out here. You can't find somebody to say a good thing about these stocks.
They're delisting the frontier markets ETF?
Yeah, it's like they think we don't want the risky stuff as soon as we need it. It happens every time.
Dude, what is your favorite frontier market? Like some Kazakhstan or some shit? What are we buying?
You know what my favorite frontier market is.
What, Vietnam?
How dare you?
Yeah. All right, my bad. Didn't Vietnam used to be an emerging market, then they got downgraded to frontier? Is that what happened?
I've been there. It's probably appropriate to put them in frontier.
Got it. Okay, fair enough.
They're the largest by far. They've made up I believe over 20% of the FM. So, but it looks bad. It all looks bad. Vietnam still doesn't look good. What does look good? Have you noticed these new highs from, I don't know, areas like Malaysia, EWM, the Philippines, the EP.
Shout out to the Malaysian ringgit.
Right?
Malaysian ringgit just ripping, man.
Indonesia, EIDO, highest level since last year. These areas trade with China. Southeast Asia, they trade with China. Perth was making a point yesterday that all of emerging markets used to move with China. Like even the ones that are nowhere near it. Southeast Asia still really does. So seeing all these Southeast Asian country ETFs at new highs, new cycle highs, I think begs the question, when is China going to join? And now you're starting to see it. So I think this makes a lot of sense.
All right, now let's flip that on its head. We're going to go from the biggest piece of crap to arguably the best. Go to slide 2, please, Spencer Israel. Slide 2 here, the real star of the morning show. This is, to me, I mean, come on. So this eliminates the mega cap weighting in Berkshire Hathaway, in JP Morgan, in Bank of America, in Visa, MasterCard, right? This eliminates all of that. Equally weights, so you're getting a broader look at arguably the most important sector in all of global financial markets, right? Global financial markets, financials being arguably the most important one for global financial markets. Most countries, I shouldn't say most countries, probably most countries, but definitely a lot of countries around the world have even more exposure to financials. Political calls, bastards. That's like the Twitter spam bot of telephones, political calls. Most countries around the world have more exposure to financials than the United States. This is a big sector. You know, most countries around the world don't have all the technology exposure the United States have. Financials are a big one. No?
I'm in, man. I'm behind this one. Love it. The
New
financial
all-time highs?
Yeah. Mhm.
I mean, you know, it's hard to understate just how important this is. How do you feel about that?
If you're looking for me to argue with you when you say nice things about financials, you're just not going to get it. I think this is the group. This continues to be the group. This is where you want to put your money.
Now let's remember we live in a market cap weighted world. So throw up the new slide 3, Spencer, please. This is the market cap weighted financials, and this is financials, guys. This is not like one of these situations that, you know, I would expect to see money flowing into if shit is about to hit the fan. Right? I just don't see it.
Yeah. We're gonna have to pull up some charts here. Yeah.
I've got one more that I wanted to show you.
I got one too.
Here. So this is the one for me. So Spencer, throw up the new slide 2 here. This is European financials, guys, hitting new 6-year highs. European financials hitting new 6-year highs off the COVID lows, outperforming the United States. Look at European financials. Listen, I've been through a few cycles. For some of you guys who have been through some cycles before also, European financials are usually not market leaders and showing relative strength when things are bad and markets are deteriorating. Right? If things are bad, things for European banks are really bad.
These stocks are doing great, and they had fallen behind a little bit. I think you could say the same about Canada. But
Canada, yeah.
The financials anywhere you look right now, just solid. Really good stuff.
Can you believe that at the Future Proof conference last year, the Canada room, they didn't let me in because I wasn't Canadian, like legit, like only Canadians.
You mean this year? That
this
just
year.
happened.
Yeah, last year they let me in. This year they did not. They were very strict this year. Only Canadians were allowed in.
I too tried.
I don't think that's okay.
No, I know.
Could you imagine if like I had like a Cuban corner over there somewhere? Only Cubans are allowed, and we're smoking cigars and drinking rum and stuff like that. Only Cubans. I'll be the only one there, sitting there by myself.
So I too tried to sneak into that party. It's funny, we did not do it together, but we had the same idea. I wanted to go see my Canadian friends. They wouldn't let me. We'll have to talk to Josh and Michael about that.
Can you believe that shit?
Yeah, I know. Not happy either. Can we talk about like just the broader market really quickly?
Yeah, are we not doing that?
Yeah. Index level stuff here. All right, so NASDAQ 100. We talked on this show, 2 weeks ago. Things were looking dicey. It looked like we were breaking the VWAP from the August 5th volatility day. Right. So I just want to update everybody because I guess these charts could be really, really hard to mark up on your own at home. So it's in the channel. Throw up this NASDAQ chart. We talked about the VWAP, how when the market sees heightened volatility, right, or selling pressure, or it's characterized by selling pressure. The market's messy. What do? You drop VWAPs from pivot highs and pivot lows, and you let them do the work for you, right? So down here in early September, we broke that VWAP from the August 5th lows. And I was thinking, okay, we're probably going to at least retest the August 5th lows. S&P looked like this. They all look like this. And what happens? They reversed it. It took 2 days. They reversed it, reclaimed that VWAP. Then they also reclaimed the VWAP from the July pivot highs, all-time highs, right? And that tells you really buyers are back in control. So if I come on here and I say, look, we're below the VWAP from the August 5th lows, I think we're probably going to retest. We really want to see bulls back in control of the short-term trend, right? We want to see bulls back in control of the tactical trend here. That happens above these VWAPs. Then when they get reclaimed, I'm not going to pretend like it didn't happen. I'm happy to be wrong when we do this.
Yeah,
right?
but you weren't. It's not so much that you were wrong. Remember, we came back. It was not last week, but the week before. And Monday we had a big day in the market, and I was like, "You're not impressed?" And you're like, "Nah." And Tuesday we had a pretty good day too, and I'm like, "Still not impressed?" You're like, "Nah." And then Wednesday you had a big reversal, big move, and you were like, "Okay, now we're talking," right? And then Thursday you were like, "Yeah, right." So it was like a progression. It doesn't happen overnight.
Right. But we do talk about it on the show. So I just had to update. Somebody was asking about my bearish call. Yeah, I felt very bearish, but now we are adding long exposure again. This is just how this works. It's frustrating. Trust me. Buying things back higher and shit.
I sent everybody, I wanted to, we'll bring in Kenny now, but I sent everybody on the Slack an article on Barron's that I thought was pretty good. I'd love to drop it on the chat. Where is it? You have it, Spencer? It was on Barron's. It was good. Here we go.
What was it about?
Wait, where is this?
I'm dropping it right here on the private chat. So
right.
this is an article that I think was, nice reminder for people who have traded for the last 25 years. A great reminder. And if you have not traded for the last 25 years, read this because it will reiterate that we've seen these things before. This like Magnificent Seven, we've seen it before. This concentration in the largest companies representing a large percentage of one index or maybe two indexes. There's a lot of indexes, so you have to be very specific, but there are some indexes that carry very high weighting with some of these stocks.
Yeah.
And we've seen that before. And this is nothing new. It doesn't mean the world's going to fall apart. It's just the way the markets work. We live in a market cap weighted world. The rich get richer. The better companies get bigger. The shitty companies get smaller and go away. That's the way it should be. That's the way it is. That's a good thing. People who make poor choices lose. People who make better choices win. Like that's how this works. Oh, yeah. So I would encourage everybody, whether you've traded the last 25 years or not, this goes back to roughly the late 90s. So basically the last 25 years. Highly encourage you. Great read. It'll take you 5 minutes. But good reminder that the heavy concentration at the top is perfectly normal. It works. Right?
Good companies get better.
Shitty companies get worse or go away, hopefully. That's right. Should we bring in Kenny, Mr. Spencer Israel?
How about that football?
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Ooh, Kenny Glick in the house.
What's up? Strazza, I hate that trade too. Buying back things higher and shit. Yeah, I hate that trade. But you know what? The day traders, lately, we've been able to buy back things lower and shit. So it's been a pretty good market. Yesterday, same stocks around and round, but I get where you're coming from. I thought we were gonna, have a little weakness there too. But man, once you just get lazy on the bull market, it just rips your freaking head off every time. And you know what? Chinese stocks are back now too. Oh my God. What's up?
So somebody like yourself, Kenny, you don't really, you're a day trader, right? You're mostly intraday, but do you go out of your way specifically to make sure that you don't own any of this stuff overnight and it's just an intraday trade, particularly the Chinese stuff?
Recently, yeah. Over the last couple of years, I went back to the old school. I was talking about it yesterday, how you make a little money, put it in the queues. Make a little money, put it in the queues. And a couple of swing trades. I mean, not owning Palantir right now is just breaking my heart. I owned that stock for so long. I had a good move. Once it got added to the S&P 500, I just didn't want to just go, oh, it's been added to the S&P 500. It's a no-brainer. Buy it back. Well, it was a no-brainer. I should have bought it back. I still like it, but yeah, especially going into earnings season, 2 more weeks. I love being liquid and being able to stay focused. And, again, that's where I'm going to be. And if the market does pull back, another one of those weird August 5th moments, I'll have some cash to put to work. And I got some couple ideas of things I'm looking to buy, but there's plenty of stocks that are still breaking out. I mean, I'm not a huge fan of these Chinese stocks because I've been scarred by a lot of the ones that were not even real companies or proven to be frauds. And I'm talking about 20, 30 years of this, just nonsense Chinese IPOs. It's awful. But there's no ignoring what Alibaba's been doing. And if you guys know about the CQQ, it's the Chinese QQQ or your KWeb. You're making a little turn here in Alibaba, for instance, right here. If you guys look at my chart, this is a 2-year chart. We talk about the Kardashian bottom, big butt right here, big butt right here. You're breaking 2-year highs today.
Can you throw it up, Spencer?
So you're breaking the yearly high, and now you're looking at a 2-year chart. Chances are you're finally going to get back to that 98, 99 area. And if you do, you're looking at $102 on Alibaba. And if that's making the turn, usually they're all going to come along for the ride. Your popular ones, back to that conversation that you were just talking about, stick with the popular ones. Your Babas, your Baidus, JD's making that same turn. So a lot of these stocks look exactly the same because they all travel together. Not a fan of owning them, but hey, the trade is on right now.
What's on the move this morning other than China?
Materials. Some of the old, I've been looking at Halliburton and Alcoa. They're all coming up. These are 2-year VWAP charts. They're butting up against a very specific area. So Alcoa trying to pop its head above there. BTU, something I haven't looked at in a while. BTU trying to come out of that awful range. This thing's been stuck in the mud. BTU, even Cliff, trying to coming out of the dungeon. So some of those stocks, something different to look at right now, because I've been looking at the same 5 or 6 stocks.
Hold on. Didn't BTU get bought out?
BTU, I don't think it got bought out. No,
sure?
maybe I missed the news. That's why it's been going sideways for so long.
Yeah, I think so. Spencer, didn't BTU get bought out?
Peabody, really?
I thought it did.
I don't think it did.
Maybe not. It's just trading like that.
That doesn't sound familiar.
Yeah.
No, you guys might be right. I might be totally making that up.
Yeah.
Billy, remember Smart Heat and Puda Coal and
Look how tight that thing has been trading.
Oh yeah, BTU has been
It's literally been trading like it got bought out. The way it looks, I'm surprised it didn't get bought out actually.
Yeah, a lot of these stocks have barcoded. That's why it's like if they come out of these ranges, even what's the one that everybody was buying on the dips? Oh, Oxy. That looked like it was finally going to come out of that range, and it just went right back and broke back down. So a lot of these stocks just got hammered, and I thought they were going to hang in there, but I'm liking these names. But Alcoa, I've always been a fan of Alcoa, done well with the stock, so I'm just watching that one come out, see if that comes out of the party.
Fun fact, Kenny Glick. Fun fact. You know why Alcoa is always the first company that reports earnings?
They're not anymore.
They're not anymore. But why were they?
They used to be.
Yeah.
In the old days, they used to report earnings in alphabetical order.
Is that what it was? Really?
Yep.
As simple as that?
That's it. They used to do it in alphabetical order back in the day, and Alcoa just kept with that tradition until, I guess, a few years ago, right, Spencer?
Alphabetical order is also why Apple's ticker is AAPL, because Steve Jobs wanted them to be first.
Wow, fun facts. I didn't know these fun facts.
Another fun fact, Dick, what's the guy, the New York Stock Exchange guy from back in the day? Dick Grasso?
Right.
Dick Grasso saved the letter M on the New York Stock Exchange for Bill Gates to move over to the New York Stock Exchange, and had that single letter M ready for him, waiting for him. And Bill Gates just wouldn't do it because the NASDAQ is who took them public, and he was loyal to the NASDAQ.
Wow.
And he wouldn't take it.
Did you ever notice that his head looks like a thumb?
Bill Gates, his head looks like a thumb?
No, Grasso.
Oh, I haven't seen that guy in a minute.
What?
Yeah. Now you'll never unsee it.
All right. Guys, get Kenny's daily watch list. I'm going to drop the link in chat and throw it on the screen right now. It goes out every single day. Where is the link to Kenny's watch list?
Oh, by the way, just a shout out to somebody who gave me credit for that Carvana call, man. Hey, listen, I was out at 120, but if you're still in it, congratulations. I know. I can't believe where it is either now. I thought
Dude,
120 easy.
Carvana is the poster child for short squeezes. Carvana is the
Absolutely.
bellwether blue chip short squeeze name. And when it's doing this, the other short squeeze names are probably rolling. So Carvana is the JP Morgan of shitty companies. How about that?
Hey, listen, I was buying this thing at 750. You couldn't even get any calls above 85 at one point because they just gave up on the stock. That was when I was buying the $50 calls for $5. Oh, what happened to my life? Have a nice day, everybody. I'll see you in the room.
You know, a whole new meaning to tell your friends to get with my friends and we could be friends. Whole new meaning to that.
Okay. I don't even know what to say to that. All right, let's go. It's 9:03.
Little music.
Yeah, well, let's talk music. So Strazza messaged me last week, and he goes, "I want to get this guy on the show." David Schulhof. I was hanging out with him in Sandy, wherever you guys were, Huntington Beach, Newport Beach. I don't know. Future Proof, and so here we did. So he's on the show. So let's talk about investing in music and talk about also not just that, but whenever we talk to someone who has an ETF, it's always kind of fun to get like a behind the scenes look at that business, at that industry, so to speak. So let's bring David on and let's talk about it, shall we?
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
David, welcome.
Hey guys, good morning.
Hey, David, how are you? Good to see you.
I'm doing well, Steve. Good to see you again.
So, yeah, Spencer basically, I think, just gave a nice little background. Bumped into David at Future Proof last week, which, I mean, the conference has gotten so big at this point. It's hard to actually find people. But I just saw David the last morning before we headed out. I said, oh, the music ETF, right? I've heard of this thing. We talked about it on the show, I think, a month or two ago. I'm not sure why. And there's a really interesting backstory. So I thought having David on the show, explain why he did this, right? Like, why the music industry. We told some of the guys on the team, there's not enough music stocks. There are. So I figured we'd dive in, just have a nice little conversation about it here today on the show.
Awesome, guys. Well, look, it was definitely a great conference. You had great bands. Third Eye Blind was awesome. Ex Ambassadors were awesome. DJ Quick, amazing. So, great conference there. But look, as I told you when I met, I've been in the music industry for a really long time, for over 25 years, investing in public and private companies. And I realized like 2 years ago, there was no real liquid way for retail investors to get exposure to music. And there were so many companies out there. So last summer on July, I launched MUSQ, and today we're the first pure play music exchange traded fund, giving investors, a front row seat to the whole music industry across streaming, content, live music events, ticketing, equipment, tech, satellite, and radio. So we're here really to give retail investors exposure to domestic equities and foreign equities across the whole global music industry ecosystem.
I love it. What is the bullish thesis, I guess, for these streaming companies? Why is this such an exciting growth industry?
Yeah. So look, if you read the Goldman Sachs report, Music in the Air, Lisa Yang, the top analyst, the music's basically doubling between today and 2030. Okay. Paid streaming subscribers are going from 700 million to 1.3 billion, right? It's almost doubling. And music is under monetized. That's why you see companies like Spotify raising rates. They raised rates 2 quarters ago. They crushed earnings. They raised it again last quarter. They crushed earnings. The stock is up, 80% for the year, 150% over the last year, over the last 12 months. And it's growing at like 10 to 15% in the US and as high as 25 to 50% in the emerging markets. And when you look at cell phone penetration, I mean, you have 8 billion people on the planet, 7.2 billion people have a cell phone, and less than 10% have a paid streaming service. So the cost to enter all these emerging markets is zero, right? You just partner with a telco. And so streaming is just on steroids right now, and it's really explosively growing. And we have all the companies in our fund that capture all that growth.
Well, so this is almost like a cell phone adoption story. What were the cell phone stats, and then the percentage of people who have a streaming platform on their cell phones? What are those numbers again?
Right. So you have 8 billion people on the planet. 90% of this planet has a cell phone. Less
Right.
than 10%, there are about 700 million paid streaming subscribers. And that number, according to Goldman Sachs, is going to 1.2 billion by 2030. Right. So
Why
it's
do you think
almost,
Yeah, why do you think it's so low? Like I would almost assume that everybody with a cell phone has a streaming service.
right.
That's
So,
the
but right,
normal.
but not a paid streaming service, right? Because everyone historically equates music with radio. It's something that they shouldn't pay for. But now they realize that music's cheap. Music's undervalued. It's cheap to what you pay for HBO Go, for Netflix, for Hulu. So you have a
Yeah.
deal. You have a bargain at $12 a month to get access to 200 million songs. You pay double that for Netflix, and you have to have all the other services too. So if you listen to JP Morgan, it's the best content story today because music's undervalued, music's undermonetized, and we think music represents a very compelling investment opportunity for that reason.
Yeah, I like that. And if you think about it too, we're what, a decade into this streaming situation where at least Americans are getting really used to paying for 5, 6, 7 of these things, $10, $15 a month, right? You got the Hulu, you got the HBO, you got the Amazon. It's like it never ends. So we've been trained to pay a monthly service charge to watch stuff. I guess your idea and Goldman Sachs with the report that they wrote is that we're going to do the same thing with music, and then that's going to be adopted in a big way, but it hasn't yet.
Yeah, and you're going to pay more. I mean, every quarter now they're basically raising rates, not just, Spotify, but Apple, Amazon, Google, Tencent Music. And so what's happening is these revenues are growing massively. And just
Yep.
look at the stock. I mean, every quarter, Spotify is reporting record revenues. This past quarter was 246 million paid subscribers, and they're growing revenue from their existing subscribers and their incremental and new subscribers. And what's happening is 70% of that revenue is now being passed down to the content owners, right? That's the deal. Those are called the
Yep.
total content. That's why you see all the record companies growing at 15 to 20% every quarter because they're growing in tandem with the streaming companies. So the ecosystem is working together side by side. As the streaming companies grow, they pay more of that revenue out to all the labels and the publishing companies.
Now, a company like Spotify at this point, we could throw up the chart. I mean, look at this. This has been one of the better smaller tech stocks this bull cycle, back at those all-time highs already. It's made a monster move, trading from around 70 to about 370 today, just this cycle. It's not cheap at this point. I'm seeing like 150 times from price to earnings standpoint. But investors, you never know how much they're willing to pay for some of this growth. What really blows my mind is, and this is so on topic for today, I'm glad that we had you on the show actually today. We didn't plan this. China had a huge session overnight. Looks great out here today. But there's been one stock in the Chinese tech landscape that's been good this whole cycle, right? Baba's been bad. JD's been bad. They've all been bad. The Tencents have been bad. Baidu, oh my God, terrible. But if you look at Tencent Music, throw up the TME chart. I mean, this one's been fantastic. So it doesn't even matter that it's in China. There's just been a major headwind on Chinese stocks due to the government. None of them have done well. But this one, whatever the economics of their business are that you're describing, have been so good that it's like the market ignored kind of all those cautionary signs that are holding other Chinese companies back. This one's trending well. Here it is versus TME K-Web in the lower pane too, just showing how good it has been versus its peers. So this is their music streaming out there. If you want to talk about Tencent Music a little bit.
Yeah, no, look, Tencent Music after Spotify is the second biggest streaming service in the world, followed by Apple, then Amazon, and then Google. So look, you have 700 million paid streaming subscribers. 246 million paid streaming subscribers are Spotify. About 100 million or 110 million are Tencent. And then, the balance are Apple, Amazon, and Google. I like answering questions quickly. I see, David, why is Spot a lower allocation than Apple, Amazon, and Google? Look, all these companies are market cap weighted. Okay. So we've capped the big names at 5%. I had to include Apple, Amazon, and Google in the fund, guys, because they're the third, fourth, and fifth largest streaming companies in the world. They're still
Absolutely.
music companies, and they're a very important part of our business. So I wanted to include them. But Spotify's got a big weight. Tencent's got a big weight. I love these companies. I love the story. I love streaming. And look, and I think these companies are really positioned for more explosive growth ahead.
Listen, having Amazon, Google, and Apple up there as your top 3 holdings, what a nice anchor for the fund. I mean, these guys are going to be involved in everything. They're hard to beat. They're in all the major indexes. So I think that's nice that you have them as the largest weights. And then you got these little kickers with Spotify, 10 Cent Music. How about some of these other ones? Like, what is the story with Live Nation?
Yeah, I actually wanted to ask that because you mentioned the other industry groups. Can you talk about just the construction or the logic of the industry group inclusion there? Because, I have a little thing I wanted to bring up as well.
It's got to be like 75, 80% communication stocks.
Okay. So, okay. 35% of this fund, guys, are all streaming stocks, the ones we just talked about, right? 35% are all content companies, right? So that's companies like Universal Music Group, Warner Music Group, Sony, companies like Hybe, which owns all the rights to Ariana Grande and Justin Bieber. These are South Korean companies, companies like him in Taiwan. Those are the big content companies. Then about 10% of the fund are live music events and ticketing companies. So on the top holdings chart you just showed me. So companies like Live Nation, obviously, is our biggest position for live music. CTS Eventum, that company right there, is the counterpart for Live Nation. It's a German company, right? And then we have companies like Vivid Seats in the fund, and other smaller ticketing and live music companies. So that's 10%. And then 10% are, equipment and technology, and 10% are like companies like Yamaha, which are important because they're actually producing all the tools, all the keyboards, all the pianos. We wanted to include equipment manufacturers that are very part of, driving the AI and the blockchain. So those are the 5 different segments. But if you look here, we've got a mix of, domestic companies and foreign companies. Cube, that's a big South Korean company. South Korea is a massive market, right? We've got, I think, 10 or 12 companies in the fund from South Korea, companies like Genie Corp and Kakao, the biggest streaming companies, and then companies like Cube and YG Entertainment. So we've got a total of 40 companies in this fund across these 5 different buckets. I think Spencer just asked me a little bit, talk about the mechanics. Let me walk you through kind of how the eligibility requirements for these companies and how we decide to include them. So I don't know if you guys have a chart that shows, but I can kind of walk through for the audience today. So we scraped the universe, guys, of all music companies around the world. All the companies that generate more than 50% of their revenues from music are eligible for inclusion in the fund, or they're a top 5 player in one of those 5 categories. So obviously Apple, Amazon, and Google don't have more than 50% of their revenues from music, right? That's obvious, but they are top 5 players, and so they're included. No company can be smaller than $100 million in market cap, and it has to have average daily trading liquidity of $600 or $500,000 a day. This fund gets rebalanced quarterly. So every quarter, if a company becomes too small, they get kicked off the index. If a company goes public, say through a SPAC, or a company may have grown, it becomes eligible for inclusion. And so every quarter we have a couple companies that come off and a few companies that may come on. For the most part, these companies, stay the same, just their weights would change. So all the companies are market cap weighted, and it gets rebalanced every quarter.
Is this primarily the growth story here? Is this really an emerging market situation? I'm still thinking back to the numbers that you gave us at the top of the interview, talking about how few people globally have streaming or paid streaming services, but do have cell phones. I feel like that mix would be far more favorable in emerging market countries.
Yeah, so the emerging markets are growing at like 25 to 40% right now. They're growing in excess of US. So US streaming is like 10 to 15%. Emerging
Wow,
markets
so
are
high.
like 25. Listen, I mean, think about it's like you're already 5 times GDP in the US, and you're like, much higher than that in the emerging markets. And so this is a growth play. Music is a very aggressive international growth play.
Which one do you think has the most exciting growth story of the individual components?
Of all the stocks in the fund,
Yeah.
yeah, I mean, look, I like all the streaming companies.
Yeah.
I think those are really exciting. Love all the live music companies. Companies like South Korea, they can be a little bit cyclical. So some of the stocks have been down the last quarter. Because
Sure.
like BTS may have stopped touring, or
Right.
Blackpink maybe may stop touring, but once they start touring again, the stocks rip. And so we are in a little bit of a cyclical business. So some of these stocks, may perform better around Christmas time, or may perform better during tours. Like last summer, we had the Eras tour, we had the Renaissance tour. But here's what's exciting for investors, okay? we have the ecosystem for any artist, right? So you pick your favorite artist. Spencer, who's your favorite artist today?
John Mayer.
Okay, John Mayer is a great example. So John Mayer signed to Sony. Sony's in the fund. John Mayer has a deal with Live Nation. Live Nation's in the fund. So John Mayer also has a deal to perform at the Sphere. Sphere is also, by the way, I forgot to mention that stock's been on a tear. That's in our fund.
Really? Did you
Yeah.
listen to John Rogers' presentation at Future Proof? He loves this one. He wouldn't stop talking about it. Sphere. Yeah.
Sphere,
All right, good.
Sphere. Look,
I know
Sphere is
it's-
like another great example of a live music stock that has just been on a tear. It's all about. I mean, I don't know if you guys have been out there, but the venue's unbelievable, and they're building another one in London. And so we have in the John Mayer example, Spencer. Like we have all the companies in the ecosystem for you to participate in John Mayer. If you like Taylor Swift, she signed to Republic. Universal's in the fund. So that's how we're kind of giving. We really are giving investors exposure to like their favorite artists, to the ecosystem. We're letting them capture the growth around music, and I think it's a great liquid way to invest in music.
David, who are the companies that are buying these music catalogs, and are they public?
Yeah, great question. So I included all the royalty trusts in this fund when we went public, but if you notice, many of them went private. So Hypnosis was a public trust, a royalty trust that got taken over by Blackstone. Round Hill Music Group was a royalty trust that got taken private or got bought by Concord. And then we have all the other majors actually have publishing companies, but we are giving investors exposure to all those deals. So if you looked at in the last like 5 years, you had Springsteen, Tom Petty, Paul Simon, Stevie Nicks, they all sold their catalogs. All those companies were in the fund. So you get exposure to all, whether it's the royalty trust or the majors, right? If there are any independents that are buying those publishing catalogs, they're not in the fund if they're not public. So, but if they are public, then they'll be included. And you are seeing more of these companies go public. You're also seeing more royalty trusts go public. Look, I've been in this business for a long time. That's my background. I've owned everything from Bill Monroe to Death Row. I mean, I had one of the biggest music companies in the world. I sold my company to KKR. It became BMG Rights Management. And I was going to do another publishing company, but I saw all these private equity firms, Blackstone, KKR, Apollo. They were all buying these catalogs. And by the way, they were paying like 20, 25 times, which are like 5% unlevered yields. If you look, investing in our fund is a far superior way to get exposure to music. If you look at the index going back over 5 years, in 2019, it was up 22%. In 2020, it was up 39%. In 2021, it was up 26%. Last year was up 22%. We are an uncorrelated fund of the market, right? So we are a very steady growth play for investors over the long term. And music's just too big to ignore today. You cannot ignore the growth of music and how music stocks are doing.
One of these private equity shops is probably ready to swoop in and get the Bad Boy record stuff for pennies on the dollar right now, I would imagine. That's what these guys do. I mean, no?
I mean, they probably could.
Yeah, well, so Bad Boy had a partnership with Arista Records, which is owned by BMG. So I don't know if Puffy still owns Bad Boy, and he may have to. He had to sell out of his interest in Revolt. The music, the TV network he had, and if he owns Bad Boy, he may need to sell it too. So, ironic, when I was at Future Proof, they were playing all the Bad Boy songs. So I don't know what was going on over there.
Yeah, I noticed the same thing.
Yeah.
That's funny.
Yeah, well, we're going to lay off that topic for this morning.
David, I want to ask you about this chart. Is there anything that would change these trends, right? The trend, of course, being the streaming going parabolic and all the other revenues from all the other forms of media going down. Is there, would anything change this, or is this just the way our life is now?
Yeah, no, look, nothing would change it. Look, let's not only tout all the great things. Look, AI is a risk today, right? You want to talk about AI, you do have fraud and you do have market saturation with AI. So that could potentially slow down some of the growth if, all this white label music, gets flooded onto Spotify. You do have, fakes that are getting recorded that may, take some revenue away, from some of the labels. Universal Music Group had a revenue miss last quarter, by the way, because they miscalculated their revenue from Spotify. So the stock was down big last quarter because, Spotify, the way it's growing, it used to only be, music from the three majors. Now it's like audiobooks and it's podcasts. And so, they're growing, but they're not delivering that much, the same amount of revenue that they historically gave when they launched. So that could create, a slow in potentially for recorded music. But like I said, music's undervalued, music's under monetized. AI is allowing, on the flip side, AI is allowing more music to get recorded. You have more artists today that can record, full albums in their apartments, in their homes, and that's creating more music. And so it's a very healthy industry. Look, in 2020, about 24 years ago, right, was when Napster hit. And the industry went from a, $20 billion business, and it dropped massively. Then Spotify got launched, and today the industry, the recorded industry alone is like close to a $50 billion business today. So it's more than doubled and rebounded. So even through periods of technological, call it disruption, right? Or I call it innovation, it always comes out ahead. And so we're going to hit a bump in the road with AI. But if you forecast like 10 years from now, I think the industry will wind up being double from where it is today.
I got to ask you, speaking of disruption, I think back to Pandora. When I was in high school and college, this was a mind-blowing technology. This was like artificial intelligence 15 years ago. I don't know how they did it. Whatever happened to them? Do people still use Pandora? Like, who bought them?
Yeah. Yeah. So to answer your question, Sirius Radio bought them.
Okay.
Tim Westergren was the founder and CEO, and he built an amazing algorithm for it.
Wow.
Backed out of Silicon Valley. And now think about all the derivative uses from Shazam that we have. And now AI is capitalizing on that. No, listen, and Spotify is now using AI. You type in any artist, you hit start radio, and it spits out, 50 different songs that sound like your favorite artist. So AI is just great. AI is great for listening to music. It's great for discovery, and it's great for producing music.
Now, did Pandora, was that like a successful exit for them? I forget how they did publicly. It probably wasn't great.
Not great.
Right.
Yeah.
Is this like an early story of like some killer AI technology, but you just don't get any gains in the stock market, at least in their case? I don't know.
Yeah, look, it was CapEx intensive. They were building out, tech, and they were trying to scale it. A lot of these radio stocks, they require scale, to grow, and they're very capital intensive.
All right, one more before we let you go.
Yeah.
Podcasting, right? Are we at peak podcasting yet? The guys in the chat are talking about Joe Rogan. I know there's been a lot going on here. It seems like everybody has a podcast today. Do podcasts even move the needle? They're far less evergreen than music. For example, there's an episode and you want to listen to it today or tomorrow or the next day, but you're not going back a year later to listen to some old podcast episode. What are your thoughts on podcasts?
Yeah, no, podcasts are the new radio. I mean, if you look at all the different music companies are investing heavily. Live One, we have Live One in our fund. They own Slacker Radio, which is the service in every Tesla car that you buy. They bought Podcast One, okay? And they're like doing tons of podcast deals. Spotify is investing heavily in podcasts. So is Apple Music. No, people want to listen to news. They want to listen to podcasts. Podcasts are a great way to, get incremental revenue from subscribers, from getting new subscribers. So I actually see it as like the new radio.
It's awesome.
Right. I have a couple quick ones. First, besides AI, what are some other risks we're not thinking about?
Look, piracy is always the biggest risk. Deep fakes are a big risk, right? Yeah. So copying and the reason for that is because you don't have any federal copyright protection in your voice, but that's changing right now.
Don't scare me like that.
Yeah. Even you, Spencer, we could take your voice. I could have my own radio show and sound like you if I wanted to.
Okay. Wonderful.
So that's getting changed. You got two bills before Congress, the No Deep Fakes Act, that are going to stop. They're going to make it a crime. You have the Elvis Act in Nashville, Tennessee, that makes it a crime now to lift somebody's voice. You can't do that. So look, that's all sort of connected to AI. Look, piracy is always a risk. Look, music's been a great business long term. It's come a long way since Thomas Edison invented the phonograph, right? And look where we are. It's gone through, tons of innovation, tons of disruption, from, acetate recordings to vinyl to CDs to cassettes to MIDI disc to compact disc to Napster to streaming. And so we're kind of like entering the next phase of whatever it is. What is post streaming, right? Is it AI? I mean, soon you'll just be able to just type, talk to Siri and have Siri, deliver, hey, send me music for the day, right? And
Yep.
so it's been an exciting, music's an exciting journey. And what I was hoping to accomplish with this fund was really capture all the growth and innovation in all these companies, and give investors exposure to all these different areas and let them participate. Guys, to the audience out there, you've been consumers of music your entire lives. All you've done is given, artists from Steely Dan to, Zeppelin to Bob Dylan your money. Now you can actually own shares in a fund that pays you money, that pays you back. And because it was a very private industry for a long time, right? And that was the purpose of it, was, buy a couple of shares, put it in your portfolio, park it away and watch it grow.
This is great, David. I'm glad we had you on. This was a fun conversation. Spencer, you got anything else?
I was just hoping, just because you run an ETF, and I'm very interested in that industry. Just maybe if you could just talk a little bit about like the launch process and like the AUM and sort of how it came about. What was the reaction when you launched it, and how the fund has grown, either from an AUM standpoint or just from a market cap standpoint, just in the years since you launched it.
Sure. So I launched it. So I launched it. I launched MUSQ. You can see it in my background here. That was, the day we launched it on July 7th of 2023. So we're about just a little over a year old. We have close to $25 million in our fund. We have, anywhere from, 5 to 15,000 shares trading a day. And investors are, really liking it. I mean, we're in the process now of onboarding with a bunch of wirehouses and broker dealers. So I'm out there, now just, doing a lot of TV and interviews with you guys and just getting investors, excited about the fund. You have 4,000 ETFs out there, and you have $10 trillion of available capital. I have to believe some of that money, will be flowing into the fund. I do see, a question here: why is trading volume so low? I mean, look, we're a new fund. 10% of all ETFs, guys, drive 90% of the trading volume. What's important is not what the trading volume is, but look at the AUM. Is it sticky? Are the companies performing well? Do you like the companies? We have trillions of dollars of liquidity in this fund. You could buy any share, any amount of shares that you wanted to. You're getting exposure to great companies. We're very transparent. Go to our website. You can look at the holdings. You can see the weights. That should be, what's driving your decision, not like the trading volume. But yeah, our goal is to obviously get trading volume up and grow it and get more institutional buying and get more retail investors excited about it. It's a new product. I mean, a year is a pretty new, some of these firms, they won't even take you until you have a 2 or 3 year track record. So we're just marching towards that track record and getting as much, retail interest as we can into the fund. So then we can onboard with LPL and Raymond James, and then eventually get up to, Merrill and Morgan and JP Morgan, and then have them.
Once you're in the wirehouses, you're good to go.
These things take time. I do love me a good niche ETF.
Oh yeah, I love it.
I think you did this in a really thoughtful way. I think you're really onto something here. The secular growth in this industry, it makes sense, and you do have a nice basket of names with international exposure. So good for you, and best of luck.
Steve, Spencer, thanks a lot, guys. I love your show, and thanks for having me on.
Thanks, David.
That right there is Exhibit A. That's Exhibit A as to why I love ETFs so much. I think the ETF is the greatest invention in the history of financial markets. The fact that, because you're only limited by your creativity. That's your limitation, is your creativity, right? How creative do you want to get? And look, niche theme ETFs, I'm a sucker for them. I can't help it. I love them, right?
I love a good thematic.
I love it.
It's fantastic. David seems very knowledgeable. He's been working in this industry pretty much his whole career. So who better to run it? And just go look at Spotify, go look at Tencent Music. I mean, the growth here is pretty incredible. And then you got the Google, the Amazon, the Apple as the anchor weights in the fund. I think it's set up quite nicely.
Yeah, like when I want to invest in something, I generally speaking, I just pick a theme. I don't pick a company. All right, right. I just pick. I go and pick a theme. So if I wanted to invest in music, this is how I would do it. I wouldn't go with TME. I wouldn't go with Spotify. I would just buy them all. Right. Yeah. So that's just, but that's just me, and that's how I do things. I invest in in themes and broad baskets, and then I'm guaranteed to have the winner, right?
You're a basket builder. You're a basket builder.
Exactly. That's why I love them, and I love ETFs like that, and I hope we get more. So he said there's 4,000. People are talking about an ETF bubble. I say shenanigans. I want more ETFs because the more the merrier.
Tom Lackey pointing out the growth in the ETF and fund space. Absolutely.
I mean, there are more indexes than there are stocks, but I don't care. Do you? I don't care.
No, I don't think it's a problem. I think the problem about the fund landscape right now is mutual funds need to go away. That's the problem. Mutual funds are
they need to convert. They need to convert. I mean, let's go now.
That's the problem. Give me
more.
We're
nowhere near an ETF bubble, bro.
What?
There's only $8 trillion in ETFs.
Let's go. Give me more.
Yeah, it's gonna keep growing for sure.
Yeah.
$8 trillion. You don't like, not you guys. I know you guys know better, but like people out there wondering, do you think that the AUM and ETFs is going to go down?
Dude, they just delisted frontier markets. There's a long way to go here. We still don't have a liquid frontier markets fund. It's ridiculous.
And most people can't buy ETFs in their 401ks. Can you imagine once that happens?
Yeah, the government's a problem too. All right, let's move it on. They're always a problem.
Right. Anyway.
I really liked some of the things that he was saying there. That was really interesting. Well done, Strazza. Strazza met a friend in California, brought him into our house, welcomed into our home. That was very nice of you, Strazza. I see what you did there.
That's part of the reason why we do these things. You never know who you're going to meet. Like I just bumped into him. I saw the booth. I did a booth run Friday, right? I filled up like a swag bag. So I was just walking around. No, Wednesday, because you left too early. You couldn't do that. So I went around and I talked to all of our friends. I got to stop at the booths, talk to the Y charts folks. It's just business.
I ran into Dan Ives on the first day. I think I ran into him, and he was so excited to come on our show. He's like, JC, it's going to be so fun. Like, he was like wilding out. He was very excited.
What was the best swag? What was the best swag? I have to know.
I do like this because I'm trying to get a hat for all of the big six banks. So I was able to add one more to my collection. I still need two.
That's the dumbest thing.
Citi, Bank of America, if you're listening, I mean, what am I supposed to do when I talk about your stock?
People collect baseball cards. You collect bank hats.
Yeah. Nerd alert.
I got an Nalgene bottle. There were no good Yetis. I got 3 golf balls.
Is that the top? Was that the top in the Yeti? If there were no Yetis there, speaking of Yeti
gear, they pared back on the Yeti gear.
Speaking of barcoding, oh my goodness!
Can we get back to emerging markets?
Yeah, I'm gonna fill up my coffee
if you want,
because the emerging markets index ETF, slide 2, of course, start the morning show. Slide 2. Look at the emerging markets index fund. It's a quarter China, making new multi-year highs today. Was doing great despite the struggle in China. And now that China stopped going down, it's doing even better. How do we feel about that?
I mean, everyone's been asking for years, when is the rest of the world going to catch up? Maybe it's starting to. I don't know.
If you throw up the new slide 2, Spencer. So this is Kifu.
What?
Kifu?
What?
Kifu.
I've never heard of this.
Well, this is Kifu.
Yeah, you keep saying that as if I know what it means.
This is it's a credit services company in China.
Oh, wonderful. Yes, that's what I need. China credit.
What?
I need more China credit in my portfolio.
Yeah, there you go.
Yeah.
So it's a credit services. So the way it's been explained to me in the past is that it's like Make My Trip, but
Okay.
for China.
Okay.
Make My Trip, the Indian. It's like the Indian Expedia or the
Yeah.
Indian Priceline or whatever, right? But I
Yeah.
don't think this is that. So I don't know if that was explained to me properly. This is a credit services company. So this is like a fintech company from what it seems like to me, but it's Chinese. So who the hell knows what it is? They could make shoes or make nothing, right? Who the hell knows what's going out of there? But
Dear Lord.
it's a nice base. It's a nice base. You say, dear Lord, Spencer, like I'm crazy. Like, do you trust anything that these people say?
No, of course not. We were talking about this in Chicago with Sonu. Yeah, no. Okay.
You got a bunch of Chinese guys sitting around a board, be like, what do we want to tell people we made in GDP this year? All right, 7% sounds great. Lock it in. Let's go to lunch.
Pretty much, yeah. All right. We have Patrick here, so I want to bring him on in a second. Before we do that, I wanted to just cover a couple of things. Do we have a Visa chart handy? I think we do. Visa's down, 4% this morning. The DOJ is going after the old antitrust trick. DOJ is saying that Visa has a monopoly on the U.S. Debit card market. So,
doesn't MasterCard do debits, or is it just Visa?
MasterCard does debit cards too, but Visa is the one that has engaged in monopolistic practices, according to the DOJ.
If MasterCard does
MasterCard, I think already had a thing. I don't know if it was the DOJ or not, but they settled with the government. I don't know when that happened. It was like a year ago or 2 years ago or 6 months ago. I don't know. MasterCard had a thing, an antitrust thing or whatever, and they settled. So they're home free.
I think the truth is that this is mostly Visa space at this point. I can't remember the last time I had a debit card that wasn't by Visa. Like, go look in your wallet.
Yeah, I mean, you're probably right. Like all those, like the Visa gift cards, right?
Not even that.
Oh,
your debit card from your bank is by Visa.
Is it? I don't have my wallet. I don't have my wallet here.
Yeah, it's Visa. Strazza is right.
Yeah.
All right.
Yeah, like when you go to ATM.
Leave these guys alone. I mean,
yeah, Brian, I was thinking the same thing. Like, who uses a debit card? But I use it for the ATM machine. You know what I'm saying, Brian?
I rock a debit card. I rock a debit card.
And then sometimes you have like these like companies that don't want to accept Amex.
Yep.
Right? Like that's a piker move.
You got like rental car situations.
You agree with that? Would you agree with that, Strazza? If you don't accept Amex, that's Bush League. That's a piker move.
They don't want to pay the fees.
No, I know why. That's why I'm saying it's a piker move. Like you're gonna be that company that you're gonna be like, oh, we don't accept Amex because we're some cheap bastards.
Listen,
I don't
know. In this space right now, PayPal. This company has been beat up so bad. PayPal, trend reversal. Square probably follows. These guys, if they're not going to zero, it's time to go up and to the right. Come on now. We've seen these patterns.
Let me ask you a question.
What? Square looks just like ARC. We're just going to complete this base.
Let me ask you a question, my friend.
Yeah.
When did these stocks, PayPal and Square, stop going up?
When internals peaked way back in the first quarter of 2021.
That's right. So, and these are companies that you're mentioning about how good they're looking and how they're coming in and buying them, aren't you?
Same theme, my friend. These are some of the worst stocks. Yes.
ARC. I mean, think about it.
Yep.
Think about the worst stocks. Kathy Wood stocks, anything that has to do with her couldn't be worse. China, solar, biotech.
Yep.
You know, the IPO names, PayPal, Square, these are literally, by definition, the worst companies on the planet. They were the leaders at the end, or they peaked early, but they were the leaders of the prior cycle off the COVID lows. They're like free money, right? Helicopter, the whole thing, make it rain.
Yes.
And then, so these are the companies that took off. They were the first to peak in the February of 2021. And what are we seeing right now? They're coming in and they're buying them.
Billy Cunningham. Great point here. In early September, me and Sean got long puts in Square. If you just zoom into that chart, look at it from the Q4 lows last year, textbook head and shoulders top. right? We're thinking volatility's picking up. If the market turns lower, retest those lows from early August. Let's get short the worst ones. We went to square. Didn't work. That's information, right? 100%. I'm long the common stock.
Yeah, that's information. That's a great point that Strazza is making. You know, when you put on the trade and, you know, it doesn't work and you get that reversal in your face, the market's telling you something.
Yeah,
It's up to you to listen or not. Most people choose not to.
We picked
Strazza
one
chose to listen. So kudos to you.
Huge mess. Trade didn't work. Glad we put it on.
No doubt.
I'm just looking at what's up and what's down. Reminder, everyone, Las Vegas Sands, Chinese company. They don't have any properties in America or North America, for that matter.
Are these casinos ever going to have their moment? Because the charts are starting to look.
Las Vegas Sands has had a moment this morning because it's a Chinese company. Their properties are all in China, and I think they have one in like Malaysia, right? But everything else is in Macau. So
I like the way the Caesars is set up, man. Last time I was at Caesar's Palace, I was in Spencer's backyard in Atlantic City.
You know, I didn't know that Las Vegas Sands, I guess things have obviously changed there and they've kind of restructured, right? Because they used to own the Sands here by me back in the day.
They own nothing.
Now,
that's
fascinating that it's all Chinese. That's fascinating.
Yeah, all China.
Wow. All right. Spencer Israel bringing the fun facts here today.
If you're seeing the Las Vegas Sands up 7%, you're like, what the hell? Well, it's up with China. It's Chinese. So
did you guys see all of the DraftKings stuff in Chicago?
Yeah.
There's
a DraftKings in Wrigley.
Like, you see what's going on here?
That's not unique. Many stadiums and arenas in this country now have sports books in the.
It is unique because it literally was illegal like 2 years ago. So this is a mega trend, and yeah, it's happening everywhere. So it feels like it's not unique, but this is brand new.
Could you imagine Pete Rose walking up to Wrigley with DraftKings in the corner? He'd never make it to the game.
It's vindication for Pete Rose.
He'd never get there.
Yeah, that's true.
You'd be like, just going to place a quick bet. Be right there. Nope.
All right. Should we run Patrick?
Please.
Pat, you ready? I hope so.
Yo.
All right. What's up, Pat? How's California? How was Chicago? Did you enjoy yourself?
Enjoyed it a lot. Yeah. I'm back with you guys. I didn't get enough.
I heard you guys are corrupting Alfonso. Is that right?
Oh no. Alfonso was corrupted by us.
Oh no, just good, clean fun, huh?
Pat, where are you right now?
So I'm back in Syracuse.
Pat made a good point, guys. We should probably stop calling him P. Diddy.
No, we're gonna do that. We're gonna stop calling him P. Diddy now. All right, so that we're making a new rule. We no longer, out of respect for Patrick, we're no longer gonna call him P. Diddy. We're gonna call him way worse things now.
Oh man.
We'll call him R. Kelly instead, right?
Oh gosh.
Too soon?
Way too soon.
There's gonna be a fantastic HBO documentary.
Oh, here we go.
Oh yeah.
Here we go. You think they're going to show? I was thinking this morning. I don't know why this came in my head. I can't get it out of my head now. It's very unfortunate. These videos actually like come out. Like, I'm not going to watch them.
Dude, half of my social media the last week has been, I went to a Diddy party 12 years ago, and here's what I saw.
I don't want to watch these videos. Like from the stories that I'm hearing, I'm not going to watch that shit. There's people that are dying to watch it. I'm not going to be one of those.
No, I don't know.
That's nasty. That is nasty. Anyway, Pat, what is going on? What's going on in the world? What's everybody talking about? What's on the radar?
Oh man, I mean, obviously today it's China, right? I mean, so I checked the charts, right? And I'm like, what is everyone losing their minds about with China? I totally missed that gap. That's how gigantic it is. Like it's easy to miss because
you can't even see the candle.
I know. I was like, why is everybody freaking out about this? It's barely moving. And then bam.
So China is now at its highest level since July of last year.
Yeah. All of a sudden.
We were at like new lows a couple of weeks ago.
I know. And everybody was poo-pooing EM. Like, when is it going to work? And that's usually when it starts working again.
Dude, Asia sniffed this out. All of Southeast Asia. Just go down the line, except for, Vietnam. Just go right on down the line. Even Singapore, Philippines, Indonesia, Malaysia, Singapore. all making new multi-year highs. Now China's just joining in. These countries all move together. These Southeast Asian countries, the emerging ones especially, are so linked to China. Like they're just small satellites of China. And then Singapore is the market where you can go and trade the financial assets from all of these countries. So they're linked too, even though they're not emerging. Like it's all.
So China's kind of the spark too. Like now that China's going, those will also kind of follow, even though they have been leading.
I think this is like the confirmation of that. Yeah. China's now the confirmation. Like, yeah.
Makes total sense.
I don't know. What else?
What do you guys think about the Dow hitting resistance there? Hitting that first Fibonacci level, while the S&P is breaking out from its 2-month consolidation at its Fibonacci level.
You had me at Dow. Tell me more.
What do you think? I think maybe Dow pauses here. It's been the leader while S&P was kind of digesting. Dow kind of picked it up, but I think it's time for that to kind of reverse. I think tech probably gets a nice little breath of fresh air, a little reprieve here.
Dude, so forgive me for being a junkie bastard, but is the easiest trade right now, like the most no-brainer trade on the sheets right now, not just triple Q calls, go out a few weeks and make the bet that they're also going to reclaim their all-time highs? That's 4% in the Qs. You do that through calls, what? Qs aren't going to look like SPY in the Dow soon?
Right. And I keep hearing worst 2 weeks of the year, worst 2 weeks of the year.
Great.
I don't know about you guys, but it doesn't feel like the worst 2 weeks.
No, you know why, Pat? It's because it's a bull market.
Right. But what does that mean, right? What does that mean?
When you go back, and I've taken the time to go back and look, most people choose not to. Very strange humans. But I've gone back and looked, and as it turns out, in all of the bull markets that we've seen in the past, investors are regularly rewarded for owning stocks. And those investors who have chosen to not own stocks, not own enough stocks, have too much cash, those types of people are heavily penalized, and opportunity cost really starts to add up, and it's very frustrating for those types of folks. So those are the things that we've learned from prior bull markets. So now fast forward to now, sort of a very similar situation. Investors are being rewarded if they own stocks, if they own enough stocks. Investors that are shorting, investors that don't own enough stocks are being penalized, right? Those are the types of things that happen in this market, regardless if it's September or in July or in December. It's a bull market. Stocks tend to go up in those environments.
Yeah, and I actually went back and read Reminiscence of a Stock Operator, where that quote is from. It's a bull market, and the whole story, the whole lesson behind that whole "it's a bull market" thing is don't get too cute. When the overarching trend is higher, do you want to get bearish for a month or two? Is it really worth it, or just kind of stick with the overarching trend, and you should be better off that way.
Yeah, it depends on your time horizon, right?
Yeah, that's true.
And depends on what you're trying to do. All right. What else you got? You brought some semis here, huh?
Yeah, so Micron, that's the one I'm watching this week. I know Costco's reporting earnings. I think KB Home too, but Micron is really at that level. It worked out really well. Of course, exploded out of that 25-year base or something. And then here we are retesting it. And I think this is a pretty logical place to find support. You got earnings Wednesday. I was hoping to add to it at around 90 or under 90, but haven't gotten a chance because it's firming up here.
I mean, this is so textbook.
Right?
Yeah, this is great.
So it's that simple.
We're talking like
simple. You get the breakout and the retest. That's it.
Yeah, I think so. And we're talking about a 45% correction it's coming off of after working out great.
Huge. These stocks are down massively. And then they're pulling back to levels like this. This is as good as it gets. If you believe that this bull run is, nowhere near done, or if you believe in any sort of AI revolution type of a theme of like some sort of prolonged cycle, right, due to the productivity gains, which makes sense. I think there are a lot of valid and sound arguments being made for that. You put one of these in your back pocket and you look back in a few years. That's it.
Yes, because and Steve, if we're wrong here, if this thing's a failed breakout, then to your point, oh gosh, I don't want to know what that environment is. It's probably an environment where Micron's not the only semi going down. So
they dug in. They dug in and held where they needed to.
Yeah, and I'm showing a monthly chart here. I mean, if you go and look, actually, that's a line. It's probably not a monthly. Actually, I probably mismarked that. But if you look in a daily time frame, you'll see the RSI divergence, and it really looks like it's finding support there. I never like to bet around earnings. It's like the worst. I hate doing that. But this one, I don't know. I feel good about. But of course, that's usually when it fails for me.
One of the things we're gonna have Dan Ives coming up in the next few days. One of the things that he mentioned to me when I was just chatting with him, we're talking about AI, and he mentioned to me, and I hadn't quite realized it, just how dominant the United States is when it comes to artificial intelligence in general. Speaking of monopolies, it's a complete monopoly dominated by the United States. There is nothing going on in the rest of the world. China has completely blown that opportunity. They have nothing. Even Israel's got nothing. There's like there's like one company that may or may not be doing something, but it's a rounding error with respects to what's happening here in the United States. And I hadn't quite realized just how dominant the US is in AI. And it's because NVIDIA is a US company, Microsoft is a US company, Google's a US company, Meta's a US company. So when you think about it like that, it's like, well, yeah, of course. But it took a guy like Dan Ives to kind of get that in my head. I thought that was really interesting. I hadn't thought about that at all.
Also, shout out America. We did this with financial services 50 years ago. And whether we talk about it or recognize it enough or not, today that has put the United States in a dominant world position. Think about what we did with the SWIFT banking system when things happened with Russia. We could literally stop your money around the world. Now we're doing that with technology. It continues to benefit the United States, put them in a position of power. This is a national security issue.
Yeah, I had no idea they could put governors on the chips like that. That was wild.
The government views these as weapons for sure. So trust me, they're happy and expect more of all made in the United States and nowhere else. And then expect us to use that against our political foes around the world, just like we're doing with China. We sell China watered down technology. And that's going to happen more and more and more. Just the same way that we don't sell them like our Boeing fighter jets and stuff, right? We're not going to be selling like the best AI chips either. Got news for you.
And I think you probably will see more of that.
Why is it? Because the American government doesn't trust them?
They're weapons. They could be used for some real
bad. They think that China is more likely to use these weapons in bad ways versus other countries? Yeah.
Is it that, or are we just trying to use that as like a sanction, as leverage, kind of?
Probably both, right?
Both at this point. Yeah, the gloves are off.
Let me ask you guys this: do you think we'll see an open AI IPO before the cycle's over?
I mean, they're valuing this thing around $100 billion.
That's a good point. That's the top, right?
That's the top. Yeah, that's the top.
No, it's a good point. I like where your head is at. By the time this open AI thing goes public, they file the S1, they do all that stuff. It's gonna be a monster IPO. You fade the shit out of it.
They're gonna be drumming it up too.
Yeah, that's probably right. It might that day might not be the top. It might be another week or so. Right.
Well, they'd also be stupid not to go public in this sort of environment, right? I mean, it's the AI bull market. Right?
Oh, that's
how many AI ETFs are there?
That's definitely the goal.
Right.
Are there a lot of AI funds?
I mean, so far, what do we have, right? What, bots? And I mean, they must have come out with more than that.
Those are watered down NASDAQ 100s.
They're watered down NASDAQ 100s. They're too cute for their own good. Yeah.
Well, because who would be in the AI index, right? Probably all the Mag 7s.
Well, you got the bots, BOTZ, which is the Global X Robotics and Artificial Intelligence ETF. Then you have AIQ, which is the Artificial Intelligence and Technology ETFs. Both of those are by Global X.
Build yourself a basket. Should have done it a year ago. Build yourself a basket.
Isn't the NASDAQ 100 that, Strazza?
That would have done just fine, but I think you can build an
just fine or better than anything else.
No, because if you got the Dell and the Aristonet and you built a sophisticated basket and you're in the CEG and the VST too, like
okay,
there's some alpha. There's some real alpha there for anybody who did their homework.
Okay,
and then you own the Googles and the Amazons and the Apples and the Metas too, for sure. ServiceNow.
I like that. Spicing in some utilities in there. Nice.
Sprinkle a little Palantir
Yeah.
on top.
Oh man.
That interview that Palantir CEO
watched?
did with MSNBC was hilarious.
Watch the Bill Maher one too.
That
He
was so funny.
I gotta watch these.
get to know the
Oh,
guy.
it was so good. And this is another great example of like, you don't need to sit there on your fat ass watching basic cable television. If there's anything good that you need to see that happens on basic
On
cable,
YouTube.
it'll make it to Twitter.
Yep.
And YouTube. Yeah, right. Yep.
And it'll make it to YouTube and Twitter. Like, you don't have to sit there like some schmuck watching fucking basic cable. Like, what are you doing? Like, if something's funny, like remember like the nanny pulling the baby from like the back, like the guy in the interview, right? And like the baby was crawling into the office and the nanny's like dragging the baby out the door. I mean, come on. This is classic stuff, guys. This is magic, but it's gonna make it on the internet if it's good enough.
Pandemic interviews. I don't know if we'll ever be back there. You know,
I know
TV
the
was so
naked
good.
guy walking in the back. You know what I mean? Come on, too good.
I don't know if live TV will ever be so good again. You know.
Yeah.
So
Yeah.
never forget.
All right, let's do recess.
Please.
I got two.
I'll let you go. I got three whole oxtails ready to be marinated. So that's easy.
We did filet last night and made homemade Bordelaise sauce. You would have been so proud of the Bordeaux. It was.
Were you drinking Bordeaux with it?
Yeah.
Left bank?
That one that I cannot pronounce. Beaujolais.
Beaujolais?
Beaujolais.
Beaujolais is the furthest thing from a Bordeaux, Strazza.
It says Bordeaux on the back of the bottle, JC.
Then it's not Beaujolais.
The Louis Jadot or whatever.
Louis Jadot is the négociant.
Beaujolais, it says.
Yeah, Beaujolais is not a Bordeaux.
Beaujolais listen, we can't do this here right now because the bottle's downstairs, but I'm going to send you a pic of it. We're going to figure this out.
It can't be Beaujolais and Bordeaux, Strazza.
I think it's both. I think I got
no,
a rare.
man. You
I think
know
I got a rare one.
your Germanic rules. They're very.
Steve found the one of one. It's one of one, and Steve got it.
These are very rare grapes. Even
There's
you don't
no
know
chance.
about them.
These French people with their Germanic influence, there are rules. This isn't Nam. There are rules.
I'll send you a bottle. It's okay. You can study it. All right. Listen,
it doesn't exist.
Listen, I get excited when Southeast Asia starts to trend well. Let's talk about two of my favorites right now. 10-cent music. How can we not talk about this one today? There were some comments in the chat. Throw up the TME. Let's just talk about how perfect this is. This is the best stock in China this cycle. It's down about 35% and testing a perfect level right around, what, $9? Digging in right where we need it to.
Stop for what you just said. This is the best stock in all of China. It's only down 35%.
This is as good as it gets in China. Okay. This one's been here. It's been participating this whole cycle. You got a textbook retest of the level, right? That's the base breakout level. Look at this clean retest against its peer group. That's TME versus KWeb in the lower pain. Love it. Another one. You guys are so lucky. I'm even going to mention this. Talked about this at the Portfolio Accelerator. Did I pound the table hard enough on this one? We've been
not a shipping stock.
We've been talking about this one since we got involved at the cycle lows in the 30s. Okay. We've been talking about this one for a long time. Now it's really ready. We like it so much more here.
Yeah.
More than a double higher than where we got involved. This is the moment. Trend is now higher. I think C Limited, this is the Amazon of Southeast Asia. I think C Limited goes all the way back to its old all-time highs. That'll give you about a 4X from here.
Look at that volume profile, guys. Look at that vacuum up there. Yeah. The volume pocket. Is that what we're calling it?
For all my Pink Floyd fans out there, these are the empty spaces.
Oh, all right. How can you have any pudding if you don't eat your meat?
That's the right album. You nailed it. Yeah. Yep.
I'm learning how to play the ukulele. So
I heard and I love it.
I'm pretty good already.
No, you're not.
No, I'm worse than I thought.
Patrick's good at music. Patrick,
Pat, you got anything?
Kingston Mines. That was a blast. In Chicago.
Was that your first time there?
That was my first time. That was my first time in Chicago. I'd never been.
Stop.
It was like everybody's first time in
Chicago. I've never been to Chicago. Come on.
As it turns out, I get made fun of for like 3 months leading up to this, and then we get there and like it's everybody's first time in Chicago. I had deep dish pizza.
That was a good time.
I had deep dish pizza, but it doesn't count because it was at 3 o'clock in the morning and it was cold, and I was going to eat it and enjoy it anyway.
I burned my mouth on it, and my mouth was burnt for like
That's
3
what
days.
happens when you eat a casserole. It's not a pizza; it's a casserole.
As lasagna.
Did you? Oh, you got the roof burn?
Oh yeah, it's bad.
Ruins the rest.
Amateur hour over here.
Couldn't wait for it to
Pizza
cool down.
eating.
You know.
That's the biggest risk to eating good pizza. You want it hot, but then you blow it.
Yeah.
All right. But Kingston Mines, what a good time that was.
Yeah, great spot.
Finally, we found live music that we can all enjoy together in a comfortable place.
Strazza's traumatized because I took him to Smalls down in the West Village, and you got to go down. It's very cramped, and he gets
He was mad they yelled at him.
around too many people when it's too. So this is a nice open space. He was able to breathe.
I've never been welcomed to a club in a more rude way. Like, we literally just walked in the door and the whole place like, shh. Like, what did you think is going on here? That's so important that I can't walk into the club and say hi to my friends.
It was just like that too.
It was just like that. Strazza's like, I'm out of here. I'm going to go to the gay karaoke bar across the street, and I'm going to go sing my face off, and they're going to love me. And they loved you.
That's one of the best nights in NYC in my life.
All right. Let's wrap it up here. A couple things. It's Tuesday. We got Spaces at 11 o'clock, right? We got Chart Request Live at 1. And then at 2:30, JC's doing a little preview, I guess you call it, of the upcoming AAC Mastermind course. So he's going to talk about what that entails. If you want to get there, be there, have the video sent to you. It's totally free today, 2:30. The link is in the chat, and it's also on the screen right now via QR code over our faces. There it is. We'll see you there at 2:30. But that's what we got today. Thanks to our guest. Thanks, David. Thanks, Patrick. Thanks for hanging out, chat. Go make some money. We'll see you later.
Adios.
Cheers.
I can't take no loss. I don't need no